Guys, today I'm going to talk to you guys about why I didn't take a trade today. This is going to be a little bit different of a video. I didn't take any trades today, like I just said, and I'm going to show you guys that why right now, because I feel like as a whole, for becoming a profitable trader, it's hard to not take a trade. And I want to show you guys why I didn't take a trade, and I want to show you guys what I was seeing in the market. Well, you guys might have been seeing something different, and that's okay. But I want you guys to see what I was seeing because I'm not saying I'm perfect, but I want you to realize that what you may see in the market as a good trade, I see as just a really crappy trade that you shouldn't take at all. So I'm going to show you guys that right now. So as you can see, S&P, I have this. These are my take profits for today. Every single one of them got hit. Same with NASDAQ. I only had one on NASDAQ because I wasn't favoring NASDAQ that much, and I'll tell you guys why. But here were my take profits, and I'm going to show you guys how I got that. So I'm just going to get rid of everything and start from scratch. So market opens. During market open, or during pre-market, what has happened? Right here, right here. Look what happened. Liquidity, pre-market liquidity gets swept out. Pre-market liquidity gets swept out. So now, since in my eyes, pre-market got swept out, it's either going to go up and fill right here, and then my bias of pre-market being bullish won't matter, and I'll change to a bearish bias, or it's going to stick around and not do anything. And that's what it ended up doing today. But when market opened, I was like, okay, here's where I know price is going to go, is where the green is. And this is where I knew price wanted to go during the day. And so I go in, market opens. So what do I see? Market opens, it's 8:45. Nothing is getting hit, correct? But what does it create? So since nothing's getting hit on the hourly and nothing's going to get hit up here, as you can see, it's 70 ticks away. And then down here, it's not going to go down all the way over here. It's 149 ticks. So it's like, I'm not expecting price to go all the way down here. I'm not expecting price to go all the way up here without hitting liquidity. So what happens? I go on the 15-minute because all the liquidity is gone on the hourly. So now what do I need to get? I need to get liquidity on the 15-minute. So what do I see? I see this BPR, and I also see this fair value gap on the S&P. What do I see on NASDAQ? I see this tiny fair value gap on the 15-minute. So when price went down on ES, I was like, okay, all I wanted to do is hit this on the 15-minute. So then fast forward, it hits it. So I'm like, okay, now what do I need? I need the 5-minute to retrace. So I go right here. Now I'm just sitting on the 5-minute because I have my 15-minute. So now all I need to see is the 5-minute retrace. What happens? 5-minute, up candle, retrace because it went red. There is nothing on NASDAQ right now. NASDAQ hasn't hit anything. So I'm not even considering a trade on NASDAQ because if you would consider a trade on NASDAQ, that would just be stupid. Anyways, go over to ES. I'll go over to NASDAQ after I'm done explaining ES for a little bit. But I go over to ES, and now I'm like, okay, I need to find an entry. So as you can see, This fair value gap gets completely disrespected right here, and that's just really crappy price action. And then I'm like, okay, for me to consider a trade, I just need it to retest this 15 or create a 1 minute fair value gap. So what do I see? Nothing. And on the hourly, I see this fair value gap get created, this hourly fair value gap. So that's my new drawn liquidity because I know it wants to go to an hourly liquidity. And this one, obviously, this is the candle for the hourly, but on the 15 minute, it doesn't show that quite yet, and the 5, but I know price wants to get up here, and I know price wants to hit this area right now. I know that going into this. So now all I'm doing is looking for a trade. I'm looking. This is when I was about to get off, but then I see this huge downtrend, and I'm like, okay, we're going to retest this area, and then NASDAQ is going to retest this area as well. But instead, what happens? Completely flips. Break structure. Nothing happens. Nothing happens. Sure, it creates this fair value gap right here. But look what happens. The minute this fair value gap is created, and the minute it pushes out of the fair value gap, it already hits TP1. So it's like, why would I even consider taking it? It's already hit TP1. So it's like, okay, there goes the S&P. So now I'm like, okay, I'm moving my bias to NASDAQ. But on NASDAQ, what hasn't even happened? No 15 minutes were getting hit at all. So it's like, no 15-minute liquidity was getting hit. I'm not taking a trade. This is me personally. Sure, S&P follows NASDAQ. NASDAQ follows S&P. But there was no draws on liquidity taken on NASDAQ. There was nothing, not even anything on the 5-minute. Nothing was taken. It was just one of those crappy days. And I knew price wanted to go here. I knew on ES, price wanted to go here and here. But I'm not willing to be like, okay, I know it's going to go here, so I'm just going to get in. So on NASDAQ, what happens? What do we have? NASDAQ, obviously I'm not taking a trade because it doesn't hit any 15-minute liquidity. Like it's just very simple. I'm going to keep it as simple as that with NASDAQ. It doesn't hit any 15-minute liquidity. As you can tell, what happens? It just hits TP1. S&P is still it hit TP2. And I'm like, okay, I'm off the charts. I was off the charts at like 9:30 Central Time. So Eastern Time, 10:30. And like, it's just, I'm not going to take a trade if there's no liquidity that was taken. I was wanting price to go back here, and it didn't want to do it today. And I was willing to take a trade on the S&P. I was very willing to take a trade on the S&P. But then, what happens when I can take a trade? This happens. The S&P has this risk to reward 36 ticks. Actually, I probably would have put my stops right here. And sure, I could have targeted this, but targeting this high compared to this one, all that would do is just assume, you're just assuming that price is going to go there. And it lowers your ability to take a winning trade by so much. Like, I would have targeted here for TP1. I would have gotten 3 ticks of profit, but it was already hit before the candle even closed. So I wouldn't have even taken it. And it's like, you know, some traders will see this and be like, okay, I'm going to get in. It's got to go up here. It's got to go up here. the liquidity is right here. It doesn't have to go up here. As long as hourly liquidity gets filled right here, it doesn't have to go up to here. Same thing with NASDAQ. NASDAQ was a little bit different. NASDAQ didn't even hit 15-minute liquidity for the buy side. It didn't hit anything. So as you can tell, on NASDAQ, nothing was hit at all. Nothing. Not a single thing. Sure, you could have said this inverse fair value gap, but at the same time, I'm not trading off an inverse fair value gap personally. That's just personal opinion. I'm trading off of a fair value gap or a liquidity sweep. I'm not doing anything else. And you could have entered right here. And you could have went like this. And yeah, you could have taken a winning trade. But that's not going to make you a profitable trader. That's not. Because taking this lowers your ability to take a winning trade by so much. It really does. And it's like, some days this will happen where price doesn't hit any liquidity. Like on NASDAQ, price didn't hit anything. And that's going to happen. And personally, those days are so rare. And some days it'll do that. It won't hit any liquidity. And there's been so many times I've been getting stopped out because I forgot to make sure there was liquidity. So I'm not just going to take the risk and be like, okay, today's a little bit different. That's not what I'm going to do. And it's like, S&P, I was very eager to take a trade, and I wanted to trade, but it just wasn't, I wasn't seeing anything that was necessary for me to take and put my money at risk for. Because in reality, you're risking your money. You're not risking, it's not like, I'm risking $100 to make $1,000. You're risking your own money. And sure, it could be $100 to make $1,000. And, that's okay. But it's like, you shouldn't think of it as, you shouldn't think of trading as, I need this one. I need this trade to hit so I can make some money. I need this trade to hit so I can buy this. Because you're just emotionally attached to the money. And it's not a bad thing. And that is a bad thing because it's like, you if you're emotionally attached to the money, you will never be profitable in trading. You won't be. That's all I got for you guys on what was going through my mind for today. And yeah, that's why I didn't take any trades. I also didn't take any trades yesterday. But that's all I got for you guys. Hopefully you guys enjoyed. This helped you a little bit. And I appreciate it. So thank you guys.